Hello everybody, Nathan the F9 guy here. I'm going to talk to you today about the Truth in Lending and Good Faith Estimate. These documents are associated with a home loan for the purchase of real property. Essentially, we'll start with the Truth in Lending. What the Truth in Lending does is tell you how much it costs for you to borrow the money to purchase your home. What that means is essentially they're going to take your interest rate, they're going to add in all of your fees, and what I mean by that is the cost associated with doing the loan. They're going to re-amortize it over the term of your loan, and let's say it's 30 years, so 360 months, and that's going to give you what we call an APR, an annual percentage rate. So that tells you the actual cost to do business with that bank associated with that loan. So if you're borrowing the interest or the money for the loan at an interest rate of 4% and your APR is 5%, you're probably paying a lot in fees. Generally, when I used to do home loans, I would always recommend people be somewhere between a quarter to a half a point in fees, depending on the structure of your loan. Sometimes if you're buying down the rate, you'll see an upfront add in costs, and what that does is bump up your APR. So the Truth in Lending is a way for you to shop the loan among loan officers and other banks, although I do recommend you form a relationship with someone and generally stick with them. When you're pre-qualifying to buy a home, you should also be pre-qualifying the loan officer as if it's somebody you want to work with and have a long-term relationship with. It's not very much in your interest to shop around with tons of loan officers, have credit pulled, have multiple relationships. It's usually good to do some homework and find out from other people who have done business with the bank who they recommend and form a long-lasting relationship with them. So the good faith estimate is basically a good faith estimate furnished by the bank in terms of how much you're going to pay in terms of fees and the structure of every single item on that loan and how it reflects towards your payment. The rules have changed quite a bit since the economy melted down in 2008. It's actually become a lot better for the customer, more difficult for the bank in terms of disclosing the fees. They have to stay within a certain percentage of the good faith estimate. So a lot of times what you'll see with banks now is that they're giving you an itemized amount of fees on a form that looks very much like a good faith estimate. Keep in mind that the Truth in Lending and the good faith estimate are HUD-1 forms. Sorry, not HUD-1, but HUD forms that come directly from the government that are standardized. So they all look the same. So some banks are putting out something that looks similar, and it's not technically going to be a good faith estimate or a Truth in Lending. The good faith estimate will go over what your total payment is with principal, interest, taxes, and insurance. It's also going to itemize out the costs, credit reports, flood hazard, check fees, things like prepaid interest, hazard insurance. So it's going to list out everything so you can itemize out and see what the total cost is, what you need to bring to the table for closing costs, and so that is basically going to be directly influenced by what your bottom line is to close that loan. Now you're going to get one of these from the bank, and you'll have to sign one and send one back. Now the best thing to do to keep yourself safe in these situations and make sure you're getting the deal that you signed up for is compare the HUD-1, which is the settlement statement from the title company, and I hopefully have my viewers using title companies. You can also use lawyers for this, but generally it's best to have a title company prepare the HUD-1 and the documents to sign the loan, and you compare that HUD-1 figure to what you had on the good faith estimate. It should be relatively close. If it's not, then you probably have a problem. I also always recommend that you get the HUD-1 one day prior to closing on the documents, which I believe is becoming a rule here sometime this year in 2014. And the idea is that you want to have time to look at the final figures on the loan before you get to the table. Because once you're at their table signing documents, it's very difficult to walk away, stand up, change your mind. It's nothing that they're doing, it's just that you're wrapped up in the situation of purchasing a home. So it's a lot more difficult to objectively look at the numbers if you're doing it at the time of signing versus the day prior to doing the documents. So hopefully that helps, and just remember, if it's too good to be true, it probably is. Be sure to tune in for more videos. I've kind of decided to branch out and touch on a vast array of financial products, including ideas in finance that can help you be more prepared, more educated, and better protected. Have a great day.